Well, based on the trading lane, resistance up here, resistance over here from the weekly, I would think that the market is probably going to find resistance up here. How can I confirm that? Volume. If volume starts if volume stays high and is steadily increasing without big spikes, like you see over here, okay, these huge spikes are not good. They indicate a reversal. So as long as the market is steadily moving up, volume is either staying the same or steadily moving up, no big spikes, then I would expect the market to break through. If I don't see that, then I would expect the market to reverse. Now, do you see how I've just described exactly the trading plan? I mean, go back and rewind that little part. So if the market trades up here, I know exactly what to expect. If the market trades down here, based on the trading lane, okay, this is a 4-hour bar here, got a trading lane moving up. Unless volume, again, how do I know that the market's going to reverse? Well, hopefully you'll see something like this. Look at how volume up at the top dies off, the market starts moving down, and volume stays pretty low between those 2 points. Pretty low. And then all of a sudden right here, it drops way off. Okay, let me put the cursor on here so you can see exactly what I mean. Okay, on this very bar, volume is down to next to nothing right at support. Okay, there you go. The market is not going to break through resistance, which remember we've got resistance from a weekly line. We've got resistance even just below that from a weekly line, plus the trading lane, all coming together in this one little spot. Volume drops down. No one is interested in breaking through that line because if they were, you would see volume spike up, even if it's outside of the sweet spot. That's the thing you have to remember is the sweet spots are a guideline that will help you to stay out of trouble. The professional trader has the option to go anytime he wants. Because remember, this is the guy or gal that makes the trend. Okay? So, nobody is interested in selling this through the line. This is at midnight Eastern time. So a couple of hours before the sweet spot happens, when the sweet spot starts is on the next 4-hour bar. And you can see that volume starts to come in. Okay, this bar is quite a bit bigger than the previous bar. The market closes up. It's up off of support. The market is likely to move up. So we go down to the hourly bar. And look what happened. This is the 4-hour bar that we were just looking at, right there. Okay, the market came down, went on to support. Volume is staying low. The market pops up. Here's our little dipper pattern. Volume increases. There's no follow through. Boom. So again, let's take this into the future now. If the market comes down here, this is what we want to see. We want to see volume dropping off. That if the market can't follow through and starts moving up, then you know what? Professional money is likely behind it. So what do we look for next? Well, I want to wait for a little dipper pattern because if professional money is behind it, then I'm going to see a little dipper pattern. I'm going to see volume spike up. I'm going to see the market fail to follow through, and there's my trigger to go long. Now, if I really want to zero in and I see this thing happening right down in that area, right in here, let me line up the 15-minute bar. Okay. That's going to be right in here. At least I think I got that right. Let me shrink this down. Yeah. So what do we see here? The market's moving down.